How are you doing today, Kim?
I'm doing great.
Good. I first want to introduce all of my sponsors, and I really want to thank them for that. That would be Domino Federal Credit Union, Fire and Knives in Linden, Texas, CMB Bank in Queen City and Atlanta, and Texarkana Contractors. Kim, I want to talk to you a little bit today what's going on. We're at Farmers Bank here in Texarkana, and tell us a little bit about yourself.
So I am a mortgage loan originator here at Farmers Bank and Trust. That's just a little fancy name for a mortgage lender. And we work in, your primary resident is what I specialize in.
Okay.
It's not going to be land. It's not going to be farm and ranch. It is going to be your single family residences.
Single family. Okay. So what makes your approach to lending different than other places?
So my approach to lending is very different in that, in the mortgage industry, it is so much more than just a consumer loan.
Right.
It is so much more than a car loan. You are dealing with people's lives. Their whole life, providing they are approved for a house, their whole life is going to be packed up in a box and it is going to be moved, whether near or far. And so that makes it so much more than just a consumer loan because you're dealing with so much more.
Now, I did notice you guys have a team. So are they going to work with an individual or are they going to be working with a whole team of people to help them get situated?
So as the originator, as the first person they see, they work with me throughout the process.
Okay.
Okay. I will get that customer pre-qualified. I will be the one that they speak to throughout the process. Now, there are all kinds of people involved in a mortgage loan process. Okay. There are title companies, there are underwriters, there are appraisers. There's just a number of different people that are involved, but I will be the person that they will speak with.
Okay. You're going to be the face.
I'm going to be the face.
Awesome.
Yes.
We love that. Okay. So what's the first step when someone wants to apply for a loan? What's the very first thing that they need to do?
So there's a couple of different things that they can do. One, if they are just searching and they are fact finding, come in, see me, let's talk. Let me know, find out what you're interested in doing. And then I can kind of give you some advice, some pointers on what might be helpful to you as you search for a house. Okay. That might be for your first time home buyer.
Right.
If it's somebody that, is already experienced, they've been a homeowner before, maybe they're selling, looking to purchase a new house, apply online. Let me get you pre-qualified and then we will go through the process from there.
So when they apply online, what do they need to go to? Is there a certain web page or something that they need to go to do that?
Yes.
Okay, very good. We'll get that information in just a little bit. Okay, so what are some of the biggest factors in lending when people are looking at applying for a loan?
So some of the biggest factors that we look at is going to be one, their income. How much house can you afford to buy?
Right.
Second is going to be, we're going to be looking at their debt. How much debt do you currently have? And that is going to help us determine how much house can you afford to buy?
Right.
And what kind of price range are you in? And that's something that we like to do in advance to pre-qualify a customer, is to let them know this is where your price range is and this is where you need to look.
Awesome. I love that because so many times we overlook or even underlook sometimes when we are looking to purchase a home or something like that. Okay, so I'm going to change the subject real quick. Do you have a dog, a cat, or neither?
I have both.
You have both. How many do you have?
I have 2 dogs and 2 cats.
Okay, what are their names?
Bentley is the dog.
Okay.
And Chief
Chief.
is another dog. And then we have the cats are Tilly.
Or how'd you come up with that name?
It just stuck. I don't know.
Or Tilly?
It's just Tilly. It's Tilly. It's she is Tilly.
She is Tilly. Okay.
She is Tilly. And then we have Brownie Puddin'.
What do you call her? Brownie Puddin'?
Brownie Puddin'.
That's hilarious.
And we got her name because she is a baby of Tilly. And from the litter, she had the brown nose. And so we identified her by the brown nose, but we didn't just not want to call her brown nose. And so we got the brown and then we just kind of stuck, she looks like a pudding. So we just said Brownie Puddin'.
I love that. That's great. Okay, back to the story. I just had to ask that. Okay, what is the maximum amount of debt that a person can have before they come in to see you?
Okay, so let me rephrase that if you don't mind.
Yeah.
The maximum amount of debt that a customer can have, adding the house payment to their debt, is 45%.
45% of their income?
of
Okay.
their gross income,
Of their
okay,
gross.
which is before taxes or anything is taken out.
All right.
So we're going to look at their gross income.
Okay.
Their maximum debt can be 45%. We want the house to stay somewhere in the neighborhood of about 31% max. And that's going to include if there's mortgage insurance added to the property, and that's also going to include the taxes and insurance.
And that way it makes it easy. You wanna make sure the payments are easy. You
Correct.
never want somebody to be in the situation where they are scared they can't make that
Right.
payment
And
because that's
burdened
yeah,
by the house payment. Yeah.
you never want that for sure.
Yes.
Okay, what are some of the common mistakes buyers make that hurt their loan?
Getting loaded with debt.
Yeah.
That would be one thing. Not paying attention and not caring and taking care of their credit ability. Collections can hurt borrowers, especially something that has happened in the most recent 2 years. That has the most impact on a customer's credit score. And that's how the most damage to their score generally takes is what was been within the last 2 years. So if someone has had a recent collection item that has hit their credit score, that's when you see it the most damage.
And that usually happens, like you said, what's the time frame for that?
2 years. 2
So
years
you look
has the
2 years
most
back.
impact. After 2 years, it's still on their credit for like 7 to 10
Yeah.
years. But after 2 years is when that negative impact will begin to lighten up a little bit and will have the lesser effect on their score.
Okay. Now I hear about a whole bunch of different programs that are out there. What are some of those programs and who are they best for?
Okay, so let's talk about some of the most common loan program that we offer. One of my favorites is going to be our USDA loan product. And the reason why it's my favorite is that it has a 0% down payment. It is the loan product for the first time home buyer. It is considered a rural property home loan. Okay, so all of Cass County is considered rural property. Here in Texarkana, it would be the outskirts of Texarkana, Redwater, Leary, Falk, Doddridge. Some of those places would also be considered rural. Inside the city limits of Texarkana would not qualify for a USDA loan. So our USDA home loan, 100% financing, no down payment is required. There is closing cost that comes with that loan. Okay, so I like to have a customer to be prepared because there is closing cost.
What does that closing cost usually range from?
You're going to be looking somewhere between $6,000 to $8,000. And every customer is different. What makes up those closing costs difference can be the cost of that house. The title policy, of course, is going to be higher on a $300,000 loan versus a $100,000 loan. Is there a survey? Do you need a survey with that property? If so, that's going to create more closing costs. Property taxes and your homeowner's insurance. Homeowner's insurance varies from one customer to the next. So that also impacts the amount of money that the customer will need for closing.
There, so they could definitely fit in. I'm seeing we've got several: the FHA, the VA, the USDA, and then conventional. So there's a lot of places that if they don't fit into one area, they might can fit into another.
And one unique thing about the USDA loan is if a customer comes in and they get pre-qualified with me, okay? And I use this number just because it's easy math.
Okay.
But let's just say a customer qualifies for a $100,000 purchase. And let's say they find a house for $95,000. They qualify for $100,000. If we do the appraisal on that property and that property appraises for $100,000, we could take $5,000 of that customer's closing cost and add it back to the loan because they qualify for $100,000. The home is worth $100,000 and it appraises for $100,000. My USDA loan is the only loan that will allow the closing costs to be rolled back into the loan.
Wow. So
Okay.
that's really pretty flexible. I mean, there's
It
a
is.
lot to do with that.
It
Okay.
is.
Okay. So we were talking about the different loans. Tell me about the FHA loan.
So our FHA loan program is also a first time home buyer loan program. It does require a 3.5% down payment plus the closing cost.
Okay.
Okay. And these loans, the USDA, the FHA, the VA loan, which I'll get into, those are not going to be the property is not going to be your fixer upper product. Okay.
It's going to be already done.
It's going to be like your move-in ready loan, a house product. That doesn't mean it has to be a brand new house. It just does not, it means that there should not be any rotted wood around your fascia boards, your windows, your doors, steps, things like that. You also don't want to see any missing paint on the exterior. One of the things I see often is maybe somebody will start in a remodel project. They've removed flooring, carpet, things
Right,
like that.
right,
And so they left exposed
right.
concrete, or whatever the flooring might be, or whatever order the slab or concrete might be. And so then they need to go in and either put flooring in, something needs to happen with that flooring before we would be able to
So
close
it
on
needs
that
to be
loan.
a turnkey walk in, we are ready to live.
Yes,
Okay.
yes. Now, it doesn't necessarily mean that you have to like the paint color. Those are cosmetic things.
Right.
But a fundamental, sound, structured house needs to be there for a USDA, FHA, or a VA loan.
Okay, very good. All right, so tell me a little bit now about the VA loan
The
because I
VA,
know.
yeah, the VA loan is going to be another loan program that does not require a down payment. There is the closing costs with that loan as well, and it is our veteran loan
Right.
program. So only a veteran can qualify.
Now, is that any branch of service? So could it
Yeah,
be, I mean, what is the one? It's not the four. What's it called?
Coast Guard.
Yes.
Yeah,
Are they
yes,
included in
yeah.
that as well? Anything that is veteran and a veteran to you, does that mean they're already that they're just in service, or does it mean they're retired out?
No, they do not have to be retired out.
Okay.
They are still in service, but they do have to serve a certain amount of time in
Okay.
order to qualify for that. And we do have to have a copy of their their DD 214.
Okay. So how long is that time period that they have to be in the military? Do you know, is it 2 years or?
I would have to get that for you.
Okay. All right. Very good. And the last one is a conventional loan. What's the difference between all the three and then just a conventional loan?
So a conventional loan does require a 5% down payment. And unlike the other loans, it does have a little room for informality, not informality. The house doesn't necessarily have to be the move-in ready. It does have some imperfections.
Okay.
On that particular one, not to an extreme, not home makeover extreme, but there can be a few imperfections, unlike the other loan programs. If you're putting down just 5%, you will have mortgage insurance until that loan is paid down to an 80% loan to value.
Okay. Now tell me what that means exactly.
Mortgage insurance is insurance that protects the lender in the event that you were to default on the loan. FHA does have mortgage insurance for the life of the loan. Mortgage insurance, let's just say someone were to default on that loan. The bank then has to repossess that property, but the bank can only resell it for less than what is owed against it. And that does happen. So then the bank would then file on that mortgage insurance to recoup any losses that they may have acquired in the resale of that property.
Okay. Now I understand that the conventional loan has that 5% down. Do the other loans have a down payment as well, or do none of them have a down payment?
FHA has the 3.5% down payment, and they have mortgage insurance for the life of the loan. Okay. USDA does not have a down payment. It has a guarantee fee until that loan reaches the 80% loan to value. Most time it's a 78% on there, because at 80%, like conventional 80%, 20% down payment, you avoid mortgage insurance altogether. Okay. If you're paying the loan down, they typically make you go to 78% before they will completely get rid of that mortgage insurance and your payment drops. USDA and our FHA, the seller can pay up to 6% toward the buyer's closing cost if they choose to. It's not a requirement, but that can be part of the negotiations in a contract. Okay. And so if that seller does agree to pay, part of that buyer's closing cost, especially USDA, where they have no money down, they're coming to the table with only their closing costs. Let's just say that the seller has agreed to pay $9,000 on a $150,000 loan, a purchase price. That $9,000 could possibly cover all of their closing costs. Okay. And so therefore they would not have to bring any money to the closing table. For instance, and we also finance double wide mobile homes.
You do?
We do with land.
Just a double.
Double wides. We cannot do single wides, but we can do double wides. For instance, I had a loan that closed this week. They were going USDA. The house appraised for more than the purchase price. The seller was not given any seller concessions. The house appraised for more than the purchase price. We were able to roll their closing costs back into the loan. The customers come to the table with less than $75 for closing cost.
Wow, that's amazing.
First time home buyer, young couple, Yes. We were able
That
to
is
get them to
great.
the table for
Now,
less
was
than
that a
10.
home or was it a mobile
It was
home?
it was a double wide mobile home.
It was a double wide.
Yes.
Now, with a double wide, do you have to have land for it to go on?
Yes, we do.
And does the land have to be paid for? Does it need to?
No, it does not. It's an all-in-one package.
Okay, it's all in one pack,
Yes.
so they can do the land and all that
Yes.
together.
Yes, title is surrendered, and so it becomes real property.
Okay, very good. All right, so typically when somebody first starts the process of going online, filling out their application to the day that they turn the key and walk into their new home, what time frame are we looking at?
We like to have everything done within a 30-day turn time.
Seriously?
Just like,
Okay, for some reason I was thinking it'd be at least 2 or 3 months.
oh, no,
You're
no.
talking
Oh, no.
30
30
days.
days.
That's pretty remarkable, actually.
Yes. And actually, a lot of that also falls back on the customer, to make that timing happen, because, when we first start off, I'm going to give the customer a list of documentations that I need from them. Okay. Once we get that documentation, that file then goes to underwriting, the appraisal order is ordered, the title work is ordered, and all of that's together. The underwriter, if we've missed anything or if she sees something else that needs to have a little more information documented, she will request those items. And it all depends on the customer and their speediness to get that documentation back to me as to how fast that loan flows.
Wow.
Okay. If I have a customer that waits a week or two, before they communicate back with me and get that information back to me, then no, they're not going to be able to close within 30 days. And that closing date is going to be affected by that. But then, if I have that customer that is eager to work with me, let's get this done. Yes.
They're ready to move.
Yeah, we can make this work in a timely manner.
That is amazing. I love hearing that because there's so many times where I know for me, you get in that excitement mode, you're ready to buy, and then dragging in feet, and then it just kind of goes away,
Yeah.
and you want to keep that excitement and that momentum going because, like you said, I mean, that's a huge purchase for someone
Yes.
that affects the rest of their lives.
Absolutely.
So that's kind of cool that you're able to do that.
Yes.
Okay. Okay. And I've got one more kind of a silly question. If you were walking into this room, what music would you want set for you?
It would have to be the goodness of God because all my life he has been faithful.
Absolutely. We have an amazing God and he serves us and we serve him well.
That's right.
Yes, very good. Thank you. Okay, lastly, before we wrap this up, do you have any additional information or tips to give people of things they need to do before they come and actually see you?
So I would definitely think about, their income. And like I said, we use gross income. That's going to be before any tax or anything like that is taken out of your pay stubs. Think about what kind of monthly obligations that you have going out monthly. That would be credit card debt, car payment, student loan payments. It's not going to be rent. It's not going to be cell phone utilities or anything like that. Your cell phone utilities, groceries, that's going to be in the other 55% that we call your cost of living.
These things that happen.
Yeah.
Yeah.
We don't calculate that. So I would really hone in on your debt. If you have credit card debt that is more than 50% used on your available limit, I would pay that down because that affects your credit score. Okay. And that's going to help you get a better interest rate if you have a better credit score.
Okay, what is the interest rate going right now? Is there where's it at, I guess?
Sure.
Because it changes daily, right?
Yeah.
Okay.
So our USDA and FHA, you typically get a better interest rate on those loan programs. Those are our government backed loans programs. We're somewhere, the last one I priced, I think I saw a 6.375 on something like that. Conventional loan is going to be somewhere in the 7% range.
7% range. All right. Well, I think that's going to be wrapping it up today. Is there anything else you want to say or tell me about? I know. I got another question for you. What kind of career did you want to be in when you were young?
Well, I always wanted to do banking.
Really?
Yes. I can remember being a little girl and telling my mom and asking my mom, "Can I just count your money?" And she was like, "No." And I said, I don't, I don't care how much you've got or anything like that. I just want to count it. I just want to count your money. And so I have always loved math. I have always loved banking. Of course, I started out my career. My first banking job was a drive-through teller at First National Bank there in Atlanta.
All right. So where did you work first?
First National Bank in Atlanta
In Atlanta.
as a drive-through teller.
And how old were you?
I was 22.
22 years old.
Yes.
And you've been in banking all these years.
I took a
Worked your
short
way up.
break.
Okay.
I did work for the Citizens Journal there for a little bit. I did
Okay.
ad sales.
All right. That's
Um,
always fun.
that was fun. But that's kind of how I got into the mortgage side of things, was because I had banking experience, but I also had sales experience, which you kind of need in order to get into the mortgage side. You do cold call.
Oh, you do?
Yes,
Okay.
you do cold call. You do have those interactions with realtors, real estate offices and things like that. So you do cold call, you do go out and see those and make those relationships. And
So who do you cold call? Like,
superior real estate agents, yes.
wow, that's amazing. All right, guys. Well, I hope you got to meet Kim. And if you guys have any questions, what is the best way for them to reach out to you?
903-255-1892.
All right. Is there an email or anything for the bank, or is the best way just to absolutely call?
Yeah, sure. You can reach me by email. It's going to be Kim, Kim, dot Holcomb, HOLCOMB, at myfarmers.bank.
Awesome. Well, we appreciate it.
Thank
You so
you.
much for being here with us today. And you guys come and see Kim. You guys have a great day.
Thank you.
Bye.